And today we're going over a stock that's in the building products business, and it's beating the S&P 500 by 600% over the past 5 years. And had you bought it 5 years ago, when we talked about this stock, you would be living in this house on the beach. But remember, if you didn't, you can walk on the beach at sunrise like Jimmy Buffett once did, and you can invest better than Warren Buffett does now. And just remember, if you didn't invest in this stock 5 years ago, you can invest in it today. And if the past is any indication of the future, you can walk on this beach and you could live on this beach like Jimmy Buffett once did. And all you have to do is learn how to invest better than Warren Buffett does now. And that's what we're going to show you. Okay, folks. If you want to receive a 1-week free subscription to our newsletters and our videos for 1 week, just go to our site and sign up for the 1-week free subscription. All we need is your name and your email, and that's it, folks. All right, let's go to our installed building products stock. Yes, that's the name of the stock. Stock symbol IBP. And installed building products installs insulation, shower doors, closet shelving, mirrors, garage doors, waterproofing, rain gutters, fireproofing, window blinds, all the stuff that the builder doesn't really want to do. He calls in contractors to do all that stuff, and they call installed building products. Has over 10,300 employees. So, folks, this is a pretty big company here. And let us look at the numbers. Now, the green lines are installed building products. The blue lines represent the average stock in the S&P 500. So the clean surplus return on equity, which is our main number, is what? 3 times more than the average stock out there. And this is over the past 5 years. Net income, which are the clean surplus earnings, almost exactly 3 times the average stock up there, and the revenue is twice as high as the average stock up there. Really bouncing along here, folks. But let's look a little closer. And when we look at the clean surplus ROE, well, first look at the net income, and we can see the net income every year has been going up. Beautiful, beautiful, beautiful returns here. So they're very, very consistent in what they do. And that gives us a clean surplus return on equity well over the 20% threshold that it takes to get into our portfolios. Now, we have this in one of our portfolios. We might put it in our second portfolio, but we'll get to that in a minute. Now, retention rate used to be 100%. Retention rate is how much money they take out of what they are making, put it back into the company in order to grow. And because they are making so much money now, that was back at the net income here, because they're making so much money, they only have to put about 85% of the money they're making in order to expand. But that's a big part of what they're making, folks, putting it back into itself in order to grow. And how do we know that they are growing at an efficient rate? Come right back to the clean surplus return on equity. And boy, as long as it stays above 20%, we are happy with this stock. And net income growth over the past 5 years, 36%. Now, it slowed down for 2024 this year, and that was all projected because interest rates have gone up. So housing sales and houses being built have slowed down. But boy, oh boy, look at this 5-year average that we just saw in the last slide. Very, very good. Now, years to pay debt, this is Buffett's rule of thumb. He says, do you take all the money a company's making and use it to pay off the debt? How many years would it take to do that? His rule of thumb is 5 years or less. Our rule of thumb is right around this, 3 years or less. So 3.2 years is right within our range there, folks. So we like this because they keep building houses. Why? Because so many houses get knocked down or blown down or just thrown down because they get old and they have to be replaced. And with population expanding, yeah, you got to build new houses, folks. And as interest rates start coming down again, probably toward the middle or the end of this year, then you're going to see the home building really pick up. So let's look at 1 year. Black line is the S&P 500. 1 year is the past 12 months. So the S&P 500 up about 28%. This stock is up about 105%. Folks, we are looking at more than tripling the S&P 500 just over 1 year. And in fact, in the past couple of months, this stock has really taken off. Let us look at 5 years. Black line is the S&P 500. Over 5 years, this stock is up 450%, with the market up about 70 to 80%. So this is 6 times the S&P 500, or the average stock that's out there. These are the kind of stocks you want to put in your portfolio, folks, if you want to outperform the S&P 500. Remember, 96%, a full 96% of professional money managers who manage the publicly traded mutual funds cannot outperform the S&P 500 over any 10-year rolling period. And that's a Morningstar report that came out some time ago, and folks, it exists today. So we want to pick stocks that outperform the S&P 500, and you can see that all these 5 years, and this was COVID back in here, and you can see it fell more than the market did at that particular time. So a stock like this is cyclical to an extent because it goes with the economy, and it will fall a little bit more than the averages when the market goes down. But boy, when the market takes off, or even just does nothing, just goes flat, stocks like this continue to rise because this is in a good part of the home building segment of our economy. Now, let's look at Pool. Pool is in our growth portfolio, and that stock symbol is Pool, P-O-O-L. And they build pools, folks, and they sell pool products. So anybody that has a pool, see, this is how you get recurring income. This is the kind of company you want that has recurring income, because it's always selling a product. Even if it's not building pools, it's still selling a lot of product. And the Pool, because a lot of people have asked about Pool, and Pool is up 150% while the market is up about 70%. So over 5 years, it's doubling the S&P 500. Now, some people say doubling the S&P 500 over 5 years is not good enough for them. They want more. So we might think about replacing Pool with Install Business products. But folks, I'll tell you what, Pool is still a pretty good company in here, isn't it? Yeah, and they do have that recurring income that we like, selling the pool supplies. You have to keep putting those pool chemicals in there to keep the water nice and blue and to keep the algae out of it and all the rest, folks. So yeah, Pool has that recurring income. We like that, and we like this company because it has done very well for us over the years, over the past 5 years. Now, the people who are complaining that the company is not doing anything because in the past year and a half, it really hasn't done anything, while IBP, Install Building Products, has done very, very well, hasn't it? So both are good stocks, but guess which one is the better one? Now, if we're going to change, we're looking at Pool in here. Let's look at a shorter term view. Down here, we can see it's starting to get, well, it has given us a buy signal. And this blue line is the 50-day moving average. Green line is the 20-day moving average. And we can see Pool is staying above both those two averages. And you want to look at this green line because it looks like it wants to go up and cross over the blue line. That would give us a nice signal for this stock. Meanwhile, we look at Install Business Products, and we can see that it was just following its 20-day moving average very nicely. And then all of a sudden, well, about a week or two ago, it came out with nice numbers that surprised everybody, and whammo, it shot up. So we're looking at maybe if we can get a chance that this stock will come back down to that 20-day moving average, then we'll buy it. So it's a little high right now for us, but just technically we're looking at this. We want it in our portfolio fundamentally because with the economy going very, very good as we speak and interest rates about to come down, we think this stock is going to go a lot higher. So folks, we had a pretty good week this week. We had that little rally toward the end of the week. And here's the sun rising on this beautiful Atlantic Ocean. So if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And folks, that's exactly what we're doing with both of these stocks that we analyzed today, especially Install Building Products. It is in the right area of the home building process. So folks, you have a good stock here. Go out, clear your head, have a good weekend, be safe, be with your family. family. And folks, we'll see you back here next week with even more stocks to put in your portfolio.